HDFC Limited or HDFC Life or HDFC AMC. Is this like, this one final answer to all the critics who've been saying that HDFC Bank was suffering because of complacency and because of they were too big and they were not able to re-innovate themselves? This merger changes the entire equation for the existing shareholders of HDFC Bank and HDFC Limited. So I think that is something which is very, very crucial. This is like if you were suffering with any Monday morning blues, the market now has decisively shaken you, woken you. Hiren Ved is going to be joining in seconds from now, and I'm sure he must have also read the news.
And for all those people who had written off HDFC Bank for the last year and a half, and were chasing ICICI Bank and SBI, this is it.
The group, see, HDFC Limited underperformed, HDFC Insurance underperformed, HDFC AMC underperformed. So now this in a sense
HDFC will own 41% of HDFC Bank. HDFC Bank is going to be 100% owned by shareholders. HDFC Investments, holdings to be merged into HDFC. We're getting the nitty-gritties.
Hello, good morning. You come to a studio and look, Monday morning blues have been shaken up.
I just
if it would have come on 1st April, I would have called it an April Fool joke. Thank God. Thank God it's come today. Trust me, that would have been my first reaction.
Yeah.
Thankfully, it's come on a Monday, which is not 1st April.
It's all believable.
Yeah.
Is it?
Well, I mean, it's come as a real surprise. I mean, in the sense that we've been talking about it for many years, right? But there was always maybe a legal angle, a regulatory, a tax angle. So I don't know how this will work out now. But I'm sure that this creates a very formidable financial institution.
What will you do now? I mean, as a shareholder, would you be tempted to buy because this becomes this go-to one bank which will have everything in it?
Well, I think anyways, HDFC Bank was selling a lot of the mortgages for HDFC, right? I mean, they were buying portfolios, housing portfolios, right? So we will have to wait and see, but I think this can't be bad for sure. I mean, this will definitely be more synergistic. The point I was trying to make is that HDFC Bank used to keep buying HDFC portfolios and market the HDFC Bank, HDFC Limited mortgages, right? Now it's a single entity.
Look at the changes here. Axis has acquired the Citi credit card business. They are trying to change. ICICI Bank is taking their subsidiaries public. State Bank of India is committed to take SBI Mutual Fund public. And here, when you thought that HDFC group in a sense was getting slightly complacent and they were too big and they were not really, the energy was missing, they come out with a master stroke and merge and shut the critics up.
Yeah, I think you can't ignore the combined entity anymore now, right?
It becomes this.
It
becomes a large consolidated play where you get access to virtually everything, retail banking, corporate banking, mortgages, and so on and so forth. So I think it's a good move. I think
in the pre-open session, they both are up 5%. The bank Nifty will do cartwheels today. If you're a short seller, you'll have to run for cover today. Very simple. Because the weightage of HDFC Bank in the bank Nifty is 30%. On the Nifty is about 9%. What is that fine print you would like to see which will convince you that this is going to create shareholder value? What do you want to see from the fine print?
No, I think the fine print is fine, but I think this will definitely create a very, very large financial institution which investors won't be able to ignore. And I agree with you that some of the sheen was getting lost within the HDFC group. Hopefully this brings a lot more energy. And I think we also had the Q4 update which came in, right, for HDFC Bank, where the numbers were pretty strong. Yeah. I think, in terms of scale, size and synergies, certainly you will see a lot of benefits. My own personal view is that we will also have to see how the merged entity works on their digital capabilities, right? Because that's not going to go away. And I'm not saying that they can't do it, But that's clearly what the market was saying when the stock was underperforming for some time, is that the way you start evaluating financial services businesses is not just the traditional way of looking at the liability franchise, the asset franchise, but also because we are seeing competition from the more agile, digital players. And I think in a recent interview, Uday Kotak mentioned that, right? The analogy of the horse cart and that we are now in cars. And I think the market was already very smart. In the last 2 years, both HDFC and Kotak Bank underperformed, while ICICI and Bajaj Finance outperformed. So if you look at the pre-COVID highs to today, market was giving you some message, right? It's not that ICICI or Bajaj Finance were less owned by the FIIs. Yeah. They were also very well owned by the FIIs, right? But despite that, they outperformed and the others too underperformed. So I think this merger definitely creates a lot of scale and synergies, but that doesn't mean that, that the market's going to ignore in the future, because the future of finance is changing very fast. And having digital capabilities is going to be very, very important beyond scale.
Think about Kotak, Aisha. I mean, they don't have any subsidiaries which are listed. ICICI Bank has got just about every subsidiary listed. HDFC Bank now, with the new entity, becomes this combined holding company or a bank which will have investments. ICICI Bank has listed all the major subsidiaries. State Bank of India will be listing all the subsidiaries. Ashwin Parekh, good morning. I've got 2 minutes before markets open. How do you think this merger, what has been the icebreaker point according to you that HDFC Group has convinced the regulator to bless this merger?
Well, 2-3 things. One, of course, is a huge synergy. The combined balance sheet would be a substantially large balance sheet. And the market cap of this the merged entity would be one of the perhaps largest ones that we would have really come across. The point is very valid. A lot of synergies are already there between these two organizations. But going forward, agility, adaptation of more digital technology, these things are going to play a very important part. HDFC Bank has demonstrated a substantial amount of prowess in the credit cards, the technology area. I suppose it's a landmark announcement today, and it changes the banking landscape in a big way, certainly.
How do you think the regulatory requirement, Ashwin, would be managed here? Because there would be a different requirement for HDFC Limited in terms of the SLR and CRR. It is governed by a different set of regulation. Bank is governed by Reserve Bank of India, different set of regulations.
Well, I'm sure, the management would have really considered, the boards would have considered the aspect of additional cost associated with additional regulatory requirements, particularly in the SLR area. And then again, once again, you'll also recognize that an NBFC, the market multiples, the way the investors look at them, are a little different from a banking kind of. So when you transiting from an NBFC into a banking environment, there is a certain period over which the shareholders will have to accept that there is a long-term kind of a perspective involved. And to that extent, the whole profile of perhaps the shareholders also will change, to that extent. But all said and done, I would certainly say in the Indian banking history, this would be one of the perhaps most interesting news. It was being talked about for quite some time. And again and again, we talked about the cost associated with this merger. But I'm sure, the board would have taken that into consideration. The regulator also will now give enough, allowance or dispensation to this entity to become a very strong financial institution in the country.
Where is the bank Nifty? HDFC Bank is up 7%, HDFC Limited is up 10%. Remember, HDFC Limited has been this underperforming stock. It was criticized because it had become too large, the home finance business had become brutally competitive, and they in a sense were struggling to grow because of a large base at the historical growth rate. The bank Nifty is up 1.5%. There is a lot of green on the screen now, and this is going to be forcing the short sellers to run for cover, and this in a sense could re-rate the entire, not only HDFC group, but banks which have large synergy benefits. Those are the banks which I think will get created. The question now, Hiren, is big is small is beautiful may not apply in financials now. When you see such synergies happening, and when you see the kind of growth what HDFC Bank has reported for the quarter gone by, they're gaining market share. So what happens to small banks now?
So I think the consolidation was anyway happening, and the big 3 and 4 were gaining market share. This only accelerates the process, right? See, I think in my view, banking will coexist. The big and the small will coexist. Maybe the smaller banks then become targets for a further consolidation in the industry, right? Because then once interest rate starts to move up and there is a fight for deposits, right? And that's where the smaller banks really take it, it becomes very, very hard for them to garner a market share in deposits, and that's where scale really comes to an advantage. So maybe one way to look at it is that some of the smaller private sector banks could actually become M&A targets, or it could be targets.
It's not happened in India. You look at the history.
It has not happened, but sometimes what happens is that one trigger, the Axis City
Domino
deal
effect
or an HDFC Bank, HDFC, could wake up people to start thinking
that also is possible.
that if that is possible, what should we do to grow now, right?
Or it could be a story of share aaya. There are so many small banks over the years. We've spoken about them that, okay, this small bank would be acquired by this large bank. This small bank is almost getting acquired by another large bank.
No, I agree, because merging cultures and, it's not very easy, right? I mean, we've seen that it was very, very tough for even, for example, when Kotak acquired ING, it was not an easy merger. It took a lot of time and effort to consolidate and integrate. But maybe this shakes up things a little bit, and this could be a trigger for people, larger banks, to sit and their boards to start considering strategic options to look for acquisitions.
I'm trying to reach Aditya Puri to see if he would like to react. It'd be interesting to get Mr. Puri saying that
Who
2
knows,
years.
maybe he began the process to work on something like this.
This was discussed,
already.
Aisha. I mean,
it can't be,
2015-16 markets were talking about it, and it captured a lot of media headline. But what we understood that time, it did not go through because of the regulatory issues. Hiren, you want to check your WhatsApp, because I'm sure by now your clients must have sent you messages.
Flooded. Okay, in the meantime, I just want to mark the markets before I go to Vikas Khemani as well. He's also waiting by. The Nifty is absolutely, it started off flat. It's now picked up about 17,853 is where we're currently at. That's an uptick of 140 points that we're currently seeing. And at a time when you've got HDFC Bank, which are obviously the top winners on the index, there is underperformance from an SBI. It's flat. Axis Bank is down 0.7%. Kotak is down about 0.3%. So, this outperformance in HDFC Bank is coming at the polarized end of even ICICI Bank for that matter. It's absolutely flat right now. It's only HDFC, and now Reliance is beginning to pick up a little bit. Had it not been for HDFC Bank today, the Nifty would have been a very different picture and absolutely flat, to be honest. But Maithili as well is here, and Maithili, time and again, this has been talked about that HDFC Bank and HDFC should merge. It's finally happened. What do you make of this announcement?
Well, as you said, Aisha, this is something that we've been speculated about for a very long time, and it's finally happened. Part of the reason, really, I think, is that the arbitrage advantage that in NBFCs, especially housing finance companies, enjoyed earlier, has gone now that housing finance companies have come under RBI supervision. So norms are now almost exactly the same for NBFCs, housing finance companies, and for banks. So the regulatory arbitrage enjoyed by these NBFCs and housing finance banks is gone. So it really didn't make sense for HDFC to continue as a separate entity. Remember, even though HDFC was able to garner deposits at a very attractive price, the bank used to garner deposits at a much lower price. Deposits, it used to get even lower. So the advantage, the cost advantage was lost, the arbitrage advantage was lost. So they really made no sense for them to continue as separate entities, particularly since HDFC Bank was also extending housing loans. So for a variety of reasons, I think this makes eminent sense. Unfortunately, again, for HDFC, the culture is not very different. They're basically owned by the same entity. HDFC will continue to hold 41%, I understand, in HDFC Bank. So altogether, it makes sense for them. The only thing is, it is not so easy to steer a giant ship. So the flexibility and the maneuverability that HDFC Bank had and HDFC had individually, they might pay a price for now just becoming one huge elephant which cannot turn and respond to changing scenario as nimbly. But that, of course, is something that I think they should be able to manage. So finally, I think the deal that everybody's been speculating about is finally here.
Okay, now there are synergies at its best. The synergies which will get created because of this merger, I think, are going to be extraordinarily high. Remember, with other banks, what we're discussing with Hiren, if you, let's say, merge a small bank with a big bank, we're talking about different cultures here. Here, it's a merger within the HDFC group. The same board is there. You know, the HDFC group, in a sense, you've got it's various business heads are on different groups, on different boards. So this, in a sense, at HDFC Limited, all the since that's the holding company, all the businesses are audited. So I don't think there is going to be anything new in terms of the business approach or in terms of in governance or in terms of in culture. So that limiting factor, which is always there when you merge two entities, is not going to be there. So I think on that aspect, which is the most critical aspect, the concerns are not there. It's all about understanding synergies, digital benefit, cost benefits, managing return ratios, how things would change. For that, you'll have to really wait for the fine print. But broadly, if you have to capture the headline, more like a bolt out of the blue, nobody expected this merger. There was no buzz. And what a season it's been, Hiren. PVR Inox, Access City, and now the BAP of all.
HDFC Bank.
They're like the big daddy of all.
Yeah, I think it also in a way signifies the fact that, you know, people are coming out of a 2-year slumber of COVID and, you know, India Inc. is getting ready, so to speak, to take advantage of the growth which is ahead of themselves. And, you know, it actually makes sense that people now consolidate and have a larger entity to then go out and take market share as the recovery in the economy plays out, right? So it kind of tells you that the India Inc. is absolutely now ready to take advantage of, you know, after 2 years of a very tough period, to go out and grow, and not just grow organically, but also to grow through acquisitions or mergers and creating scale, right? So it's a very different language.
What happens to the core business of HDFC? Because I'm just trying to understand that bank has their own CASA, own return ratios. HDFC Limited, which is taking public deposit and then lending it to a home buyer, they are working on a spread of about 1.8, 1.9%. I'm just trying to understand that how will it work on a consolidated basis?
So I think, Nikunj, if you really look at it, what happens is that during rising rate scenarios, right? And in India, we haven't yet seen interest rates rise, but eventually they will, right? Having a bank will always give you that little edge or advantage in terms of low cost deposits, right? So in my view, if you don't take, and you will have to figure out what the extra SLR costs are for such a big book of HDFC, right? But if you just look at it plain and simple, I think HDFC Limited's cost of funds will actually come down because they will have now access to low cost deposits of HDFC Bank, right? Yeah. So ideally, your spread should actually improve.
This one is coming at 9%.
Yeah, your spread should actually improve, right? So, so I think at the margin, it should be positive for HDFC Limited because they get access to low cost money.
Digant Arya, I'm sure you've been busy working the math out since the last half an hour. As big of a shocker as it may have come in at, help us understand what are the workings looking like now for the combined entity?
Yeah, so see, HDFC Limited has, roughly 50% the loan book size of HDFC Bank, and almost 80% of that is into home loans, which are like extremely low yielding loans. So, two things happen. First is that, a lot of, now HDFC had a spread of roughly, say, 1% in the housing loan business. If I add the SLR CRR cost, which now have to sit on that book after the merger, the spreads go even lower. See, HDFC Limited made a lot of profits out of lending to the real estate sector, lending to the builders, to corporates, the structured deals. I don't think all of this can happen in a banking structure so easily. So according to me, this merger has two kinds of hits on the profitability. One is that the borrowing cost or the effective cost for HDFC Limited goes up because of the SLR CRR requirement. And second is that your yields of the book actually come down because, you will probably not do the kind of real estate lending you used to do when you were a NBFC or an HFC. So both these cases, I think, the numbers will be pretty subdued for some time. The overall NIMs of HDFC Limited was around 3.6, 3.7%. HDFC Bank is upwards of 4%. So in all cases, it is earnings dilutive for HDFC Bank. So that's point number one, that, on the earnings, I think it will take 1 year, 2 years, 3 years to just integrate, get the whole bonds out of the book and replace it with, CASA and term deposits. And second part is that, we say that they are the same group, same culture, but it's actually not really the same culture because housing finance business is mostly DSA or, the sales team owned business, whereas, the business that HDFC Bank does. And see, HDFC Bank gets a lot of its multiple for high lending businesses like personal loans, credit cards. Now we are talking of adding a very large book of a low yield, kind of a book to HDFC Bank. So I think that, HDFC Bank itself was struggling with its own IT systems and, just trying to digitize and stuff. And now you have this whole merger. So I think that this group for a year or two will see earnings, probably not disappoint, but maybe, not the usual 15% that we are used to from this group. So that's my initial take on this merger. There are a lot of other aspects, but I think we'll talk about it as, more and more details come out later in the day or in the week.
Yeah, we will perhaps after the press conference, right, which is at 11 a.m. or I think 11:30. But Hiren, the other thing is that what does this behemoth now do to the face of banking per se? Because here you had ICICI Bank and SBI, which were being looked at as the, leaders. That is what everyone in the market was chasing for the 2 years. What happens now? This underperformance that Kotak and HDFC Bank had, does that bridge the gap now? Does HDFC Bank take pole position as opposed to ICICI Bank and SBI?
Well, we'll have to kind of wait and see. But if you really see, this was the only, because of historical reasons, this was the odd one out. You had no bank, large bank in India, which didn't have a mortgage business sitting inside it, right? Kotak already had it, ICICI already had it, SBI also already had it, right? This was the only unique situation where, because it was the earliest, right? HDFC Limited started as a mortgage business and then, they spawned HDFC Bank. I think it's just now coming together, right? So certainly there will be scale benefits, there will be some synergies. As I said, we will have to work out what the one-time regulatory costs could be. But I think, longer term, it should be better because HDFC Limited, because we all know that the mortgage business is very competitive, right? The NIMs are very, very, small.
Slim, yeah.
And therefore, the only way to improve profitability, what most housing finance companies used to do is that to improve profitability, they would lend to developers. And everybody, including HDFC Limited, realized that that's risky because, they all had NPLs and they had to make provisions. Yes, your yields are better, but so are credit costs. The safer end of the market is to lend to, housing, retail housing, which is where it is fully secured. And as we all know that how the real estate industry after a long period of time is taking
finally
off,
seeing,
is
yeah.
finally taking off, right? So I think in some senses this comes at the right time, that when the industry is taking off and you are likely to see rates starting to move up, you do have, you kind of lock yourself in so that you can get access to low cost deposits, which can make you remain competitive in that business, right? And you have a bigger balance sheet to play as well. So I think on the whole, it definitely looks like very well thought out. And maybe I think both the boards would have thought that probably it is worth paying those short-term regulatory costs or one-time adjustment costs of SLR, etc., for a much bigger, longer play and a longer-term play going forward from here.
Absolutely. What, Hiren, we thought we were going to chat about markets. All we've spoken about is HDFC Bank. But I think my colleague Nayantara as well has some questions for you.
Sure.
Yeah, what we've seen over the years as well is, what's happening with the retail book. And Aisha was talking about this as well. With the focus as there on the consumer business, the retail portion of the loan book, HDFC, which was in focus for the, not being there technology-wise, has certainly turned it around, managed to impress RBI, got back all of that. What's it going to mean as far as the fintech play goes, this behemoth that's going to be created?
So I think our interactions with HDFC Bank make us believe that they are working very, very hard on, creating their digital capabilities. I think they realized that 2 years ago when RBI came down pretty heavily on them. And I think since then they have been working on it. I think they will have to now extend this beyond HDFC Bank to HDFC Limited. But I think that, it's not something which is rocket science. They've been working on it, and hopefully, I think in the next couple of months, we should be able to see HDFC Bank come up with a far better digital journey for its customers, a far better app and many more services which can be accessed digitally. So I have no doubt on that. And as I said, it is a very, very critical piece going forward from here. And I'm sure that they should be able to manage that as well.
And Hiren, what is this going to mean for the, the creation of this behemoth? Is going to come together with an internal target of completing the merger in a quarter or two. That's at least what is being alluded to at the moment. The rub-off effect that's going to happen. At top of the show today at 8 a.m., we were wondering, is it time for the banks to start outperforming? We had the Q4 HDFC Bank update, 20% loan growth. Now this merger, is this now the time for banks and the outperformance that we've all been waiting for?
Well, I hope so. I think, I think the Bank Nifty was clearly underperforming the Nifty for a long period of time. And in my view, the strong update and the merger, and the Axis transaction that we saw last week, I think that this could become a trigger for money to start flowing back into banks. Also, if you look at this year, right, I mean, we have challenges of inflation, raw material price hike, higher energy prices. And if there is one sector where there is no direct impact on earnings, and in fact earnings was supposed to be very strong, I think BFSI was one sector where the impact of earnings would have been the least because of this dislocation that we are seeing in higher energy prices. So maybe this now becomes a trigger for banks to lead, in my view, and they've underperformed for quite some time post-COVID, and hopefully this brings leadership back to the banks and more money flowing in. We'll have to wait and see how the FIIs react to this big news, because they've been one of the largest sellers, and because they own that, right? I mean, and we've seen outflows from them, and therefore the banking sector has been at the wrong end of the flows. Hopefully that gets reversed, and if that does happen, then I think clearly banks do have the opportunity to lead going
Well,
forward from
let
here?
me tell you, HDFC, HDFC Bank are surely leading. HDFC futures are up 10.6%. HDFC Bank futures up 9.3%. Of course, the leader on the index right now. But HDFC Life is also running up 3.6% higher right now. Bajaj Finance is holding out. Hero MotoCorp, L&T about 1% kind of gains, and the rest of them then follow. The losers, M&M, Infosys, ONGC, ITC, Maruti, Eicher. So that underperformance that the other banks, your Kotak, ICICI Bank, SBI as well started off with, they're now marginally beginning to pick up in that sense. Not a material gain, but at least they're not in the red. Kotak is now up about 0.5%, and similar is the price action on the rest of the banking pack as well. But, since we're talking about what the movement of HDFC Bank is going to be on the Nifty Bank, and that, the banking underperformance spell may actually break with this, Hiren. What about the rest of the market? I mean, banks will do what they have to, but for the market, it's really been to the moon and back. From the last 2 years, from COVID, low interest rates, we're sitting at a completely different juncture right now. Fed has already moved on interest rates. RBI will hear end of the week. Crude is doing what it's doing, behaving like a mid-cap stock, literally. And we're in the midst of a war. But the Nifty has made up for all of its last month's losses. We are practically just shy of the all-time peak again.
Yeah, and I think who would have said, right,
Yeah.
when in the year where we were looking at largely three uncertainties of inflation, Fed rate hike, and then the war,
Yeah.
and then the state elections,
Yeah.
right? There was so much that was happening. And despite that, the Nifty is where it is, right? That tells you that if India was a stock, it's behaving like a strong stock, right? Because the definition of a strong stock is that when markets correct, they correct the least, and when things stabilize, they bounce back the fastest, right? So I think India is behaving like a strong stock. And perhaps I think that despite all these headwinds of the markets behaving the way it is behaving, I think there is a bigger story, right? I mean, we've all been saying that India's time has come. The next 10 years are going to be great. And probably the market's starting to reflect that. Also, we did, one simple analysis, when we said, okay, what's going to happen with crude at $100+ or $120+?
130.
130, right? With all the metal prices and all the raw material prices up, right? What would it do to Nifty earnings? And when you did a quick analysis and you said, okay, 35% is banks, that's not going to have any earnings impact on them. The next 17-18% is IT services. There's going to be no impact of inflation on earnings of IT services. If at all, if the rupee depreciates a little bit, there will be a little bit of a tailwind there, right? So you already have 35 plus another 15 out. So you already have 50% of the Nifty not doing. Then you had 5% metals, which is actually beneficial in terms of earnings growth, right? And then pharma, which is very stock specific, so you don't really count there. So the real sectors where you could see a real earnings impact as a result of, would be FMCG, would be autos, and probably cement, right, with higher costs coming in. So I think really if you looked at it, 70% of the Nifty had no earnings impact because of what was happening. And probably what you are seeing is a reflection of that.